Good morning. It's Wednesday, March 8th, about 6 a.m. Central Time. All right, the precious metals are flat after yesterday's explosive session. You have April gold down $1 at 21.40. You got May silver up 1 cent at $24. May copper up 1 at 3.86. April platinum up $7 at 8.94, and June palladium up $22 at 9.69. So yesterday we did see gold close at all-time highs, while silver futures continue to disappoint. The gold-silver ratio sitting at 89, and that's where that reflection's at. If this was an explosive move in the silver market, it should be 87, 86, 84. You know the drill. Should definitely be working its way significantly lower. The fact that it's not tells me that there's just not a lot of interest in the market here at the moment. 2-year treasury yields continue to be anchored at 4.5%. The dollar index is beginning to come down and roll over, which is helping provide some kind of draft between a lot of different commodities out there. But really, we want to see that break down below 103.50, 103, 102.5 in order to get some really good momentum going, especially on U.S. equity markets. So I think all the action really remains still in Bitcoin. A lot of you out there that had the Bitcoin futures contracts put in a sell on the March contract at 70,000. Congratulations to you, those of you that filled there. And then a lot of you were also putting in some buys at the $60,000 level. Got close, but not quite there. But many of you were able to re-enter below the 65,000 range with that futures contract. Up about 8% here, up $5,500 at 68 grand on the March Bitcoin right now. So that's where all the action's at. If you look at the gold silver ETFs, the GLD and the SLV, there's nothing but ETF outflows in that market, which tells me that there's a lot of short covering going on, and then also there's a lot of long liquidation. I think they're moving their funds over to things like Bitcoin, Ethereum, and other markets there. Looking at the other metals that we trade on the copper market, I think that it's really quite boring here at the moment. If you don't get Chinese stimulus, it's not going to go anywhere. I think 385 is just anchored going sideways. 378 is really where, if I had a gun to my head, that's where I'd probably look at re-entering. The crude oil market, not going anywhere either. I think if you had a gun to my head, it would be at about 72.50 or below is where I'd be interested in that December contract. I think platinum is really this $5 to $10 trading affair. So many of you that I've reached out to were buying the platinum futures contracts. We're putting a sell $5 to $10 higher, depending on where we re-enter at, where the resistance points are at, and we've been trading this kind of range here back and forth. Now, I think that if you were concerned with the sell-off in the U.S. equity markets, Goldman Sachs recommends an approach where you're buying a put option on whatever index that is most that you have the most exposure to, or that you have the most negative sentiment to, and go about 5% lower on there. So looking at a lot of things coming out today, I think there's going to be a lot of fireworks in these markets. I think that's the calm before the storm. I think yesterday was just kind of a precursor as to what's going to happen over the next couple days. So you do have at 7:15 a.m. Central Time the ADP employment change. The expectations are for 150,000. I think they'll come in just slightly higher here. We had a lot of job growth here coming into some kind of favorable seasonability. Now the JOLTS opening, which I think is a bit more important, that's going to come out at 9 a.m. I expect that to have a downward turn here. So we estimate that they fell by about 300,000 jobs here, and it's going to reflect about 8,700. That's on the million side, so 8.7 million. It's going to reflect that as a pullback in the online job postings. Now you'll also have at 9 a.m. Fed Chair Powell. He's going to speak, and he'll testify before the House Services Committee. And he said that this was on February 5th. He said that there's a danger of moving too soon, and that the job's not quite done, and that there are really good readings over the past 6 months, but we're not quite sure if that's going to be a true indicator of where inflation is heading. So he does expect we do expect about 4 interest rate cuts in 2024 and 4 more in 2025, bringing that terminal rate down to about 3.5 to 3.25%. You also have wholesale inventories at that time, and then you go out to 11 a.m. You'll have San Francisco Fed President Daly. You'll have Beige Book at 1 p.m., and then you're also going to have Fed President Kashkari right at the closing bell. So getting into technicals here on gold and on silver. So gold, resistance point, throw up a chart, shot up, kind of sitting here, 2150 is that resistance point. We cleared that. I think we're going to go to those old all-time highs here, which it did on a Sunday night. That's why you need a futures account. And that was in the 2160s. Your critical support level, I think 2100 is your first one. Then it's going to be 2075. Then you start getting into the 50-day moving average, 2057, line in the sands, 2027, 200-day moving average, 2023. Where would I want to be long? I'd probably go to a June basis, and I'd probably be between the 50 and the 200-day moving average on there. Then I'd be comfortable with the amount of time that's left on the contract, and I'd have that kind of as a core position looking for those Fed interest rate cuts. On a silver market, it did fail at the 200-day moving average, quite disappointing there. 2402 is where that level's at. I think your first level supports 50-day moving average, 2350. Your line in a sands, 2246. Where would I want to be long? Probably if I was going to go in the May contract or into the July contract, below $23. I think you'll get that opportunity again. That's about $1 lower, and I think that's where I'd probably hold a core position here for another explosive move up, and I'd give some out there. So if you got any questions, give me a call. Love to talk to you at 312-858-7303. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.